Welcome back, everyone. Hope you enjoyed watching the previous episode. My name is Christopher Lowell, managing director at InnSure, and I'm here again with Alexis Vaughn. Alexis, would you mind just reminding the audience who you are and a little bit about Off Course Consulting?
Absolutely, absolutely. So thank you again for having me back. I'm really excited to talk a little bit about my favorite topic, which is distribution. And we're going to specifically talk about MGAs today. Excited because, this is what I get to do every single day as a distribution expert in the insurtech and insurance space. I have been in insurance now for 15 years, been everyone in distribution from the captive agent, the independent agent, and I owned my own MGA. Plus, I ran a very successful MGA, ran their distribution. So I'm really excited to kind of dig in and talk a little bit about what I do in my everyday life now on the consulting and learning side of the business and when it comes to distribution.
So last time we chatted, you gave an overview of the multiple different types of distribution channels. And if I remember correctly, there were like nine of them. Could you just quickly remind the audience those nine channels, and then we'll get into some questions around them?
Absolutely. So you have first, of course, direct to consumer. Everyone knows that one. That's like your lemonades, your ethos life. So that's the way that you're actually basically taking your solution directly to consumers. Then you have the wholesale market, and that's more for our agents and brokers to be able to get market access. Then you also have retail agents. Those are your storefront agencies. So the mom and pop all the way to the state farms and the farmers insurance agencies. And then you have the brokers. So the brokers are everyone, when you think of the top 100 brokers, I think of the big four because I actually worked for one of them. So Aon, MMA, Marsh, March and McLennan, you have so many different brokers to be able to choose from as well in that space. And I even think about the Amwins of the world. Then you have embedded. Now everyone knows embedded because this is literally a process that you see where insurance is sold via the retail process. When you're booking your flight or purchasing your tickets to your favorite artist concert, there's a nice little checkbox that asks, do you want to insure this particular trip or your ticket purchase? That is what we call embedded insurance. Then we have affinity solutions as another distribution channel. Affinities can be anywhere from associations giving access to all of their small business members at a more discounted price, which helps to spread that risk. It could also be a franchise as well, where say like a Chick-fil-A or Steak and Shake decides that they want to give all their owners access to the same insurance. So they create a custom solution just for that organization where they're able to spread that risk and try to make the insurance more affordable for larger franchises. Then you even have community-based insurance. That's that social model. You've seen this where companies will actually give a percentage of their proceeds that they actually make of their profits back to the community. They also will actually maybe even target community-based business owners specifically where they have made their solution just for those mom and pop companies who actually don't get access to the best rates and the best coverages. Then you have aggregators. That's actually what I am at Off Course Insurance Agency. That is specifically someone who will give insurance agents access to the markets. So they'll get access to technology, to different carriers, MGAs, that they wouldn't be able to get on their own if they haven't been in business for at least 3 years. Or if they don't have a substantial book of business, it's much harder to get direct access. So an aggregator is a great way for agents and brokers to get access to it. Then you have the partner ecosystem where you'll see companies like Tesla and even Rivian and Allstate where they partner together to have their own insurance embedded into their actual product. So when you purchase a Rivian, you get nationwide insurance. Same thing with Tesla. When you purchase a Tesla, you can get access to Tesla insurance as well. So yeah, that's all the nine distribution channels.
Whew. My God, that's a lot to keep track of. That's fantastic. So, What I'd like to talk a little bit about is the economics involved. Like, what do in engaging with that distribute in one of those distribution channels? What's the trade off here? Like, what do the economics look like from both the distribution channels perspective and the MGA's perspective? I'm
Mhm.
imagining these are things like commission, upfront fees, things like that. Not necessarily looking for numbers, but like how is it structured?
Yeah. So what they're looking for when it comes to like the economics of starting an MGA, they're looking for, of course, because your product is brand new. They want access to education and training. These are things that they're looking for because if you're going to create a brand new insurance product or just a brand new solution for the market, you can't assume that people are going to choose your market over more established products and companies that they've already been selling for years, and they may actually get access to really great benefits. So, and on top of that, they get access to great commission points. So it's important to, number one, actually, when it comes to your brokers are always going to have higher commission points depending on the solution because they actually work on behalf of the insured. They don't work on behalf of any insurance company. So their job is to consult that client on the best product and the best pricing and solution, period. So you really have to build relationships with those brokers because their job is not to sell insurance. Their job is to consult their clients on what insurance to purchase. Then you have your independent agents. Now, your independent agents, they're a little more focused on the product itself and selling the actual insurance to their actual agency clients. So you're going to want to make sure that you're actually giving them really great commission points and access to training. And you also want to give both of these parties different motivations like incentive contests. And these are all things that I've done in my career when it comes to distribution and building out distribution models, incentive contests, anything where they're able to get access to, additional gift cards or different gifts. Maybe you've actually created a little store where they can get branded items. Agents and brokers love branded gifts, but they would love it even better if there was an incentive contest tied to it. Especially you as the MGA, that will help your economics so that you're not spending a lot of money on swag and not getting anything in exchange for it. So incentive contests are great. And once you get a little extra money, even doing different trips as well. Then you'll have appreciation events and also introductory events where you actually just do a non-sales event where you're just hosting happy hours or you're doing dinners when you're actually at a conference where there are a bunch of agents and brokers, even agency councils. This is something that agents and brokers really love. If they get to be a part of like your customer feedback, your advisory board, your council, they love that because this is separate from your actual startup advisory council. This is actually one that's focused on giving you feedback on your product. And they love stuff like that. Free continuing education based around your product come in and do as well is create that custom continuing education class around your product so that it's a way for number one, for the agents and brokers to learn about your product, but it's also a way for you to actually give them added value where they don't have to actually take a very boring continuing education class when it's time to actually renew their license. And you're giving it to them as a complimentary service. I've curated all of these things, and it's the main reason why my network is so deep of agents and brokers, and why I grew Cowbell's distribution from 4,500 to 23,000 agents and brokers in less than 2 years. And I've continued to do it for so many MGAs through off course consulting and off course learning after that. That that is my secret sauce. So if you follow those type of economics, you'll be a successful MGA for sure.
So each of those distribution channels, they must work with multiple MGAs. Do they come in some sense? Would they come back to you as an early MGA with a suggestion of what that commission, incentive structure, profit sharing world looks like, or do you as an MGA need to sort of develop that in some sense on your own, or with experts?
Yeah. So So this is twofold. So a lot of times when MGAs get started, they'll start off with a wholesale partner because it's much easier for them to first create that relationship because they give you huge market access to thousands of agents sometimes. But a lot of times you're going to have to give them a much larger commission point for access to that larger market that includes those thousands of agents. So this is where I think it's important for your distribution strategy to include phases of when you go from level to level for a market access partner to a wholesaler to going direct to brokers and agents. So it's really important for you to number one, have the right team in place from the beginning. And the way you do that, because you don't know this, is to actually hire consultants who are experts in this field. Consultants like myself and Chris, we actually know what we're doing. We have deep networks. We actually know how to actually build these relationships. And a lot of times we already have the partnerships. So now we can actually make an introduction for you, which gives you a nice cosign. And those cosigns are important for an MGA because one of the things that I want MGAs to understand is that you can't just assume that people are going to just trust your product and buy it right away or sell it right away because they have to first build trust to make sure that you're actually going to be around in a year. If they move their entire book over and you have, say, a workers' comp product, I need to know that you're going to be around when I'm ready to do my renewals when it comes around to year 2 and year 3 and year 4. Because you want to make sure that you create that safe space and be able to give them that reassurance that you're actually going to be around. So working with those consultants to develop that distribution strategy when you don't have someone in house who has that deep expertise, because you can't just say, oh, let's just go get a lot of meetings. We need to meet as many people and do as many demos. It's more than that. Your distribution strategy is more than doing a demo.
So an MGA is spending their time building technology, building their product, getting their forms and their ratings correct. They're looking for capacity. An MGA is doing all of these other things that we've talked about in other sessions. Distribution, like, when do you start that process, and how long should an MGA, I guess, think that a solid distribution plan, or at least a solid first stab at a distribution plan being executed in market, how long does that take?
Uh, so, so honestly, when you build out the distribution plan first, your distribution plan should at least get you through 18 months of being in business. Because you were supposed to have an 18-month runway anyway when you started the MGA. So your distribution plan needs to be at the beginning. Sometimes you need to have a distribution plan before you actually even get capacity. Because once you get that capacity, they're ready for you to start making money to get, to basically get out in the market as fast as possible. But if you have to pause, which tons of MGAs do, and I know this because reinsurers will bring us in and say, we're about to give them capacity, but we figured out very quickly that they don't have a good distribution strategy. And a lot of times it's because they don't have anyone on their team who is an expert at distribution. They may be an expert at technology or creating that particular type of insurance product, but not actually distributing it and figuring out what directions you should even go in to distribute that product, which is really important. So, having one that at least is 18 months long, where it gets you to different levels, where you have different milestones, because those milestones are going to be important for you and the capacity provider, and also you and your investors to be able to tell them what your real plan is. A lot of times I'll see MGAs go and try to get distribution partners after they've gotten capacity, after they've done the fundraising. And then they find out that their product isn't the right market fit. Well, they've already gotten capacity now they're all in. The better way to do it is to get the distribution partners in advance, sell them on your product in advance before you even finish creating it, because they can help you tweak it to make it more attractive in the market. And they'll be your early adopters as well, because they'll feel like you brought them into the conversation and the discussion, which that I'm a firm believer in that. Make allies early and quickly.
So, if the first step, how do you go and find some of these either brokers or agents or partners, all the people you mentioned, those nine channels? Where do you find them? How do you engage them? How do you get them interested to want to talk to you?
Yeah, so it's going to be a definitely different approach than an MGA would think. They would automatically, what I've seen a lot of MGAs do is just buy a list of agents and brokers, do a ridiculous amount of email campaigns to try to get their product just in front of people and hope that they bite. That's not the approach that you should take. You first need to build trust. I've said that a few times now. The best way to start that is to actually go out to the associations, the professional networks, the events and conferences where they've already built trust. Find ways to become partners with those agency associations and literally be able to come on. Don't automatically come in looking for new business. Come in offering to educate groups. If you start with actually being a true partner and offering education, because literally one of the things and the number one reasons why I wrote my book, Insurance Distribution of the Future, is because agents and brokers were very afraid of the insurtech space because for years when we started out in the early days, they planned to get rid of agents and brokers and just replace them with technology. They still think that because no one has debunked that myth. So you really have to make friends basically all over again. And one way to do this is partnering with those associations where they already have trust. They already have built those relationships with those agents and brokers. That's your easiest way in is not just sponsoring and showing up at the conferences, but no, truly get involved. Join the marketing committee, join the technology committee like the catalysts of the world and things like that. Join all of these different committees to embed yourself in the organization. But the number one key is whoever builds this relationship on your team with the associations, professional networks, events, and conferences, that person has to speak the language of the insurance agent and broker. So make sure that it's someone who naturally fits into that space. They already understand the nuances of what they're looking for and what they see as true value and what they actually may see as a negative as well.
What do the distribution channels expect an MGA to bring to the table? You've talked a little bit about education and onboarding. I'm thinking about things like technology, but I'd love to hear like what do they expect the MGA to be doing behind the scenes such that it's ready for the distribution partners?
Yeah. So let me say this first. A demo is not an onboarding. I'm going to say it again. A demo is not an onboarding for agents and brokers. This is so important because this is what MGAs think when they say, oh, we're going to onboard them by just showing them a demo. Absolutely not. They want way more than that. There is so much more hand holding that has to be in place. Of course, I mentioned earlier, they want trainings. You created something new. They don't know anything about the ins and outs, or maybe there are value adds in there where you have to activate technology in order to get access to these extra discounts or this extra value that the technology may bring to the policy holder itself. They need to know about all of that and they need to know why it's so important. I can't tell you how many brokers have told me, well, I didn't activate that for my client because I didn't think it was going to do anything for their policy or for them. So I didn't think it was going to add any value. I didn't know that's what that was actually meant to do. So that could have given my client a discount. But why didn't someone train me on that? You can't just assume just because they're experts at, say, general liability, that they're experts at your specific general liability product. Yours may be very different, and that may be the key things that make it your differentiator. They need to know that. So they're going to want easy to use tech as well. I know sometimes they'll say, MGAs will say, oh, we only have 5 questions on our application. It's not
Right.
just the application. If I can't even get logged into your platform to actually get to the application because I have to go through so much to do it, you're going to lose tons of agents and brokers that way. I'll never forget the data point we had with one of my startups where they had 46% of agents and brokers were not logging into their platform. And they And they were like, well, why aren't you selling the product? They said, well, it's because your platform is too complicated. It's too technical. And these are not tech people. They are hardcore insurance people, and we do pen and paper. We are still doing pen and paper applications on a lot of products today, regardless of the insurtech space and the MGAs existing. The industry has not completely changed, and I think MGAs need to know and understand that. If you want them to use your tech, you have to make it super easy to use. Also, you want to make sure that they're getting access. Agents and brokers are super, they're reliable on the way the processes work with the carriers already. When I get an agency appointment for, of course, insurance agency, for instance, I want to know, am I going to get access to the underwriter? Am I going to get access to the claims leader and my salesperson? What I've seen MGAs do is give the access to the salesperson, that relationship manager, and then give them an email address for the underwriter. That is not how agents and brokers work. They're supposed to be able to pick up the phone and call that underwriter when they have a very specific reason why they need to get an increase on a specific limits or things like that. Those things are critical for them. And those are the complaints that I hear from agents and brokers all the time with tech driven MGAs, is that there's no easy to use tech to access the product. It's not a lot of trainings, and they think that a demo is a training. And then they don't give them access to the most important people, the underwriters, and they don't let them in on the process of what a claims process would look like. You need to always be communicating with that agent and broker, because that is their client at the end of the day. So they don't ever want to feel like the carrier or the MGA may be trying to cross sell their client or take their client from them by just not literally sending out a simple email saying, hey, your client had this claim. They called us directly and didn't call you, but we just want to let you know about it. Simple things. And they always want a human in the loop. So if you're going to have tech driven technology for them to access and do applications and see what the underwriting process looks like, make sure that they actually have a human in that loop, so they get physical access to that underwriter or that claims leader.
I think what we'll probably do is wrap up close to there. I feel like there's a whole
Mm-hmm.
nother conversation still to be had around how do you manage distribution channels once you have them in the door. Potentially, how do you think about incentivizing them
Yes,
and like commissions and structures, and how do you get them more engaged to
so
grow
much.
and sell your product? And there may even be additional questions around technology. How do you integrate and think about the agency management system if that's relevant? But we'll leave these
Mm-hmm.
all for another time. Are there any other sort of final thoughts or comments that you wanted to share, Alexis?
Yeah. Yeah, just one that I really always feel it's important to talk about. I know I mentioned consultants where, like, when you think about hiring the right talent, the reason why you should actually start with consultants first is because they can save you tons of money and time. I also believe that that it is a terrible idea to actually hire a new hire at your startup who's over, maybe say VP of sales, and allow them to build out your entire infrastructure. This is something that MGAs do on a regular basis, and it is a horrible practice. And really, what ends up happening is, after that salesperson has built out your distribution business and all of that in the sales, and they move on to the next startup or their next company, you actually can't replace them because you don't know what their secret sauce was or how they built what their process was. You have no way of knowing that because you've allowed someone else to build it out. So consultants can save you tons of time, money, and also they can build that infrastructure for you. And then you can bring in a VP of sales to actually say, okay, this is the process we've already agreed on as founders. This is what we like you to follow, and then you can make it your own. That's what would happen in a corporation. Only in MGAs and insurtechs do they allow people to just come in and build their own jobs. And what happens is you can't replace them. I know, because I was one of those people who built my own entire department. And when I left the startup, they couldn't replace me because I did way too many different things. that because I believe in helping the company grow at whatever means necessary. But I did so many different things, and my processes were my processes, and they were hard to duplicate. So just some food for thought. This is why it's important to bring in consultants early on.
That's great. That's great food for thought. I can't wait for our next conversation, and we look forward to it then.